It's really easy to get motivated in the beginning, seeing other people show you their results, seeing students getting interviewed and talking about how empowered they feel in taking money out of the marketplace and being able to spend it, not just simply have some kind of market replay report, which you can't spend money on, or a demo account, which we're not paying taxes on demo. And you can't pay your bills on that. You can't pay your bills and take your spouse or significant other over to a nice restaurant once a month and not think too much of it because of a paper or tape reading event. Those results, they don't pay the bills. So when you finally get to the point where you want to try to do this and you feel motivated, a strange thing takes place when you're out there watching price action live. And when you know there's a likelihood of a big news driver coming out, something, that we call a volatility injection, which is a red folder event on the calendar. You can use the Econo Day or you can use the Forex Factory calendar. I use those interchangeably. But going back years and years and years ago, before Forex was available to us as traders, Econo Day and the equivalent was always the economic calendar everybody went to. But I like the format for Forex Factory because it was easy for me to snatch those and share them as a screenshot to students when I was just teaching predominantly the Forex market. Well, when we have these motivations in the beginning as a new interested party in speculation, learning how to trade, learning how the market's book price and how to engage it and try to seek a pattern, a model, an approach, a trading plan, something to get you into a trade, help you manage it, control your impulses, aiming for a result that is hopefully gainful at the end. And if not as much of a painful loss that would be so debilitating, it would remove your interest or remove the motivation. But when you are watching real-time live price action, whether it's tape reading, whether it's demo trading, whether it's trading a combine and trying to get a funded account passed, or trading a funded account, or live, your money at risk. It's a weird phenomenon that takes place where all the motivation that led up to you wanting to do this, now you're here. You're at the dance now. Okay, you're sitting there and you're watching price action in real time. You're not studying it in hindsight and back testing. You are now met with the uncertainty of that hard right edge, and you don't know where it's going to go. And if you subscribe to an opinion, that opinion may be challenged immediately as soon as you associate it to whatever you see in the charts. And that motivation sometimes can become impulse. Everything that you try to do in the beginning that leads you into the idea of pursuing profitability, this is your career, this is your secondary income, this is your retirement plan, this is your get rich program, whatever it is, all of you are going to have different views about why you're doing this. You want to impress your in-laws. I always found that very amusing when in 1995 I heard Larry Williams talk about that. That's when he would do seminars, live events where people would be there and he's teaching them. They would send out a questionnaire in the beginning, and then, what are you trading for? Like, why are you trading? And he said it was fun to read a lot of the responses, and people would say, like, to prove to my mother-in-law I was, really worth it for their daughter to be married to him, right? So, I mean, all of us have these secondary reasons to get in. I had that. That's the real reason why I got into it, and that's why it made me laugh when I first heard it, but also was pulling back as an audience of one watching his VHS tape in 1995. It made me feel uncomfortable because he nailed me right there, because that's why I started trading. The whole reason why I started in pursuing it was I wanted to be better and bigger than everybody else thought I would be or am. And as a young man, you're very vulnerable You're vulnerable to the effects of other people's opinions of you. And young men typically will act like they don't care, and they'll raise up and they'll use colorful language and maybe even want to throw hands because you've really just crushed them. And I was like that as a 20-year-old. You know, I wanted to find success outside of the normal venues and routes that people take, you know, working as an employee, going through college, you know, trying to be the good slave. And I don't have that. I've never really had that mindset. And it was very hard for me to try to subscribe to that view in the beginning, because it had, in my mind, it was a plan B. Like I was going to do everything I could to figure out how the markets work. But if I couldn't, at least I have a degree. At least I can go in, and at the worst case, I could be a programmer. Worst case. But I was learning COBOL, CICS, Pascal, Basic, C++. That was the highest at the time when I was going through. Now, did any of that help me get a job? No. Didn't help me get a job at all. And all the things that I started with as a motivation, like I'm going to be a systems analyst. I'm going to be a consultant for companies, and I'm going to have my own firm. That was my plan. I didn't want to be an IT specialist or a computer programmer, someone working for a company. My motivation was always, I'm going to have my own place, my own thing. I'm going to call the shots for myself because I don't want other people telling me what I want to do. So I was motivated. And what's weird is I was never impulsive at all in my decision making while going through the required lessons, classes, getting the credits, working towards a degree that would, in my mind, I thought it was going to, who wouldn't want someone with computer science and specializing in business management? You think about that. I mean, like, you got it, right? That's what my opinion was. And I was never impulsive. I was submissive to whatever. This is the prerequisites for this class. To get this, you got to do this, you got to do that. And trading wasn't even in my thoughts. Like it wasn't there. I wanted to be an entrepreneur. And because of circumstances, working for a Jewish family and owns mills, and a chance opportunity to see a magazine that, I don't know, maybe I would have saw it on a news rack somewhere. But I never really would have, in my mind, wanted to reach for Entrepreneur magazine, because it's like anything else. Most of it's advertisements. But it just happened that that magazine was laying on the desk in front of me, and I asked my then boss. I said, Glenn, can I borrow this tonight? I'll bring it back. He's like, you have it. And you know the story, that little classified ad in the back started a whole process of learning about commodities, which was coming now full circle, because when I was 14, 15, and 16 years old, my uncle was telling me the richest people in the world trade futures and options. Get yourself a good job. He was pushing me to be an electronic technician, and I wasn't interested in that. And in 6th grade, I was making my own games. I was coding them. I would stay after school in the math class, and I would ask the teacher, my math teacher, I said, can I stay as long as you stay? And when you leave, I'll leave. Yep, no problem. And sometimes I would be lucky enough to be there till 6:30. Other days, it would just be 30 minutes. And I'd walk home angry that I didn't get enough time to practice and use, because I didn't have a computer. Like, I didn't have one. So, these are all the days when we had the floppy disks where you couldn't put anything on it. Like, it was nothing. It was like literally no storage whatsoever. And the computers were just glorified calculators, right? But I was never impulsive about any of it. But I've always been 1,000% in whatever I've been in. I've always been 1,000% effort into it. But I was never really impulsive about any decision making that was associated with that career path. So I found it a little bit shocking when looking at price as a 20-year-old and the potential to make a lot of money in a very short period of time, and the sense of accomplishment that it might present to me. it was a perfect storm where I'm entering a field brand new, 1992. I have no idea what's going on. No idea how to trade. I read one book that was basically a rag that just introduced something that was not even a method. Like, I've presented you lots of concepts, but I've also given you specific models, how to use it, what time it's going to form, how to enter it, how to put your stop loss into it, how to add to it, where to target. That's a complete, absolute, no excuse. Now you know how to trade and you can apply it to any time frame. I didn't have that when I first started. I had, this is a head and shoulders pattern. This is a bull flag. This is a channel breakout. This is a wedge. This is a ascending triangle, descending triangle. And this is a broadening top and bottom formation, or megaphone pattern, and trend lines. That's what I came into trading commodities with. And the first step out of the gate in that race, impulse showed up. Why? I didn't know it then. I had no idea what I was doing, why I was even doing it at all. I completely lost the focus of what was the motivation for me to be there. I mean, it got me there. It got me to the point where I put money into a brokerage account. It got me to the point where I was willing to accept the pay $100 per contract, which they called full service commission. And as a new trader, it felt like they were going to protect me. And for the most part, they would just help you. You're sure you want to go long. That means you're trying to make money as it goes up, right? Okay. Do you want to use a stop loss? How much are you willing to risk? And they would help you determine. That was Fox Investments. Now, when you went with Lind Waldock or Ira Epstein or something to the equivalent, something where, they expect you to know your orders. They're not in there to handhold. Like, they want to get your order and get off the phone. That's the way it was back then. We called in our orders. And some of you just don't understand the gravity of that and how that would make it even more complex for you. Right now, you're all young. You're all fresh faces in this industry listening to me. And you're thinking, what was that like? Yeah, it was something. Not only did you have to be right and you had time to market, but you had to then time the market in a way where you were anticipating the setup, because when you called the broker, you got the front desk first, then you got to give them your desk number or letter. Since my last name was Huddleston, I was on the H desk. Okay, go to the H desk and you wait for them to pick up the phone. Usually within 2 rings, they pick up. And then they tell you, okay, H desk, what's your order? And you tell them your account number. And then you give them an access that says that it verifies who you are. It's kind of like a PIN. And then you tell them what you want to do. And then they read the order back to you. The whole time, all of this is going on. The market's ticking around, up and down, maybe running away from you. And I had live cattle trades that did that. It was like they opened the gate and they all ran out. And, I was, buying something way past the price I should have. But I was thinking, well, my motivation told me that I need to be on the phone calling the broker. And when he told me the price, because everything I was doing was market orders in a move that I'm bullish and it's already started running. And the price he's telling me literally is $400 past where I'm trying to get in. My motivation became impulse. I had to be part of that move. It just confirmed that I was right about where it's going to go. And I was so willing to be part of it so I can claim I was right. I was willing to be placed in the trade at a very poor location. And I had to sit through a day of drawdown because I bought it at an inflated price. And then my price was literally like 4 or 5 ticks away from the high of the day. And then it just receded back throughout the day. And I was watching on my Quotrek, which is a little handheld device, not much But what that was is a little device that had an extendable antenna on the top of it. And it would give us real-time quotes. It wasn't charts. It was just quotes. So I was learning in the same way that floor traders traded. Now, I didn't know that. I wasn't being trained with the idea that this is what you're doing. But you have to have a defined range of where the price was the previous day, the high and low. And then I would have ranges of what the morning session was the previous day, what the afternoon session high and low was, and then what was the last hour's high and low of trading before it closed, whatever market I was interested in. And those ranges I used to determine whether or not it was still favorable for me to enter. And I was only trying to be a buyer because I didn't understand shorting. But here I am. The broker's telling me, yeah, live cattle's at this price now. And he confirms the order. You want to be buying at this price, which is where we're at right now at market. And then they wait for you to confirm it. Yes. And then it's okay. You want to hold for your confirmation? Yes. And they come back a minute or so. The whole time you're on the phone waiting. It's moving around now. Think about what you're witnessing in your charts live. From the time you feel like it's time for you to take the trade, then you got to find a payphone, get out of your vehicle, walk over to it. Hopefully there's nobody in the payphone. Sometimes I had to wait. But my motivation that brought me to that trade. Sometimes I offered the guy, look, here, can I have that phone? Here's $20. Please, I need to make this phone call. Yeah, sure, here you go. And then I lost money on the trade. So it was, insult to injury, right? But motivation led to impulse. What does that mean? What's your point here, ICT? What are you getting at? The things that make you feel like you want to be able, willing to, inviting the risks, you don't respect that same measure of risk when you are really at that moment where you could still say, no, I'm not going to do it. Let me sit still and not do it. So your motivation leads you to the dance. That means you're in front of that chart. You're sitting there, you're watching it. You have your silver bullet in mind. You have your optimal trade entry in mind. You have, whatever else I've ever taught that you've gravitated to as your model. You have your draw on liquidity. You believe it's going to go here or it's going to go there, and you're ready to see it. If it could just give you a fair value gap, you're in there. But then something magical happens. Something magical comes in and changes everything. It's like your perception completely changes, and it becomes sometimes like a language you've never read before, and you're like a deer in headlights. You're paralyzed. You knew what you wanted to do, but now you're in front of the charts and you're watching live practice action and you can't do it. You're waiting for something to appear as a nudge, a little, you're right, now take it. And many of us, when we first start, we call that confirmation. The only thing that it confirms is you sat there too long. That's what it confirms. You sat there too long. Now it's already moved. It would be better for you to wait for some kind of a down close candle in a lower time frame, reach into a fair value gap if you're bullish, and then use that. Don't chase running higher price when you're bullish. Don't do it. Don't do it, because the only thing you're doing is increasing the likelihood of your stop loss needing to be larger than it's necessary to be, or making it harder for you to hold the trade, because you're going to know as soon as you enter it, you're going to be demanding subconsciously that it moves right away in your favor, and you don't want to see any kind of drawdown. Whereas if you're bullish, and this is how I teach, so it overcomes a lot of the built-in fears that are associated with being poorly placed in a trade or chasing price. So if you're bullish, I'm teaching you to buy what? A down close candle, or a candle that's forming a likely down close candle, but it need not close down. It can be trading lower and still have a higher close. But at the time of your entry, if you're bullish, you're waiting for price to go lower into an inefficiency or run below a short-term low to take those stops. So you're going to buy sell stops or buy inefficiency on a buy side imbalance, sell side inefficiency. You're going to buy that rebalancing to close up and overlap that up close candle that you're seeing as an inefficiency. So you're buying against the grain of price delivery versus impulsively chasing it. In the beginning, because you think as a trader, just like I did, I want to be in a market that has the market going up. Like I want to be in a move that's going up. It's too scary. I'm speaking hypothetically and in retrospect to how it was when I first started. So as a 20-year-old, I was afraid to buy things when it was moving lower. To me, it made no sense. I mean, it literally made no sense whatsoever to go in and try to pick a bottom. That's what I was looking at it as, because I heard my mentor say, you got to avoid trying to pick bottoms. They're like catching falling knives. You have to wait for that dagger to fall, hit the ground, stop quivering, then gingerly go over and pick it up. That's verbatim. That's literally right out of that Ford cassette tape VHS course that he had from 1995. It was ingrained in me, just like the things that I say to you as your mentor. I'm not in the room with you, but you'll see something in the charts and you'll hear my voice saying the very thing that you had a resonation with in a video or a lecture, maybe something in this one today. And you'll hear my voice, you'll know exactly what I said verbatim, because it left an indelible mark on you. It made an impact on you psychologically, so you think differently as a result of it. In the beginning, when you have no real clue what you're doing, no model, you can become very impulsive. But as a new student with a model, with all the right motivation, you still can be impulsive. What does that mean? What does that mean? What's the contrast between what I've already said so far versus someone that now has a model, has all the right mindset, has listened to all the proper mindset from the inner circle trader and how to do this and how to do that. And now we're at the dance now. We're staring at the chart. It's during that 10 o'clock to 11 o'clock hour. We know that there's going to be a silver bullet. We know that it's likely going to draw to a liquidity pool that's pretty obvious where it's likely to go. But here you are, sitting there looking at price. When you have a model and you have all the proper motivation that led you up to the point where now you've made the decision, you went to sleep the previous day, you woke up with every expectation that you're going to go into this following the plan, following the model, following the rules. You're looking for this setup to form. And now you're here. You're in front of the charts. You're there. And you do what? You act impulsively. You see something that is not your model. Perfect example. I'll give you something. You've done the work. You've done the analysis. You've listened to me talk about what I think the market's going to likely draw to on a higher time frame. You committed to the idea that that's probably what you're going to subscribe to. So you're only going to focus in that direction. And that's the proper mindset. Not that you should be handheld, but that's why I do it. So that way you can keep your premise, your bias, the narrative focused on that time frame draw. You won't be 100%. But now, because you're in front of the charts, subconsciously, you're demanding that you're 100%. Is that practical? Is that realistic? Is that something that anyone could reasonably expect to have? Especially if they're new? No, of course not. But that motivation that carried you to that moment, where now you're in front of the charts, you're ready to do your model, you're ready to pull the trigger. All you have to do is wait for that fair value gap to form, because it's going to be moving up quickly, and it's going to create that little buy side imbalance, sell side inefficiency, and it's going to form it in a place where it allows you to capture 12 to 15 handles. So that means your minimum criteria for the trade would be met. It's really there, but unfortunately, it's not there yet. And what happens is you start seeing price run. And in your mind, you're thinking, this is going to be one of those times where it's not going to create a fair value gap. And here I am. I did all the work. I got all this stuff drawn on my chart. I have all the lipstick. I have all the motivation. I'm here now. And I know what's going to happen because Murphy's Law says that whatever can go wrong is going to go wrong, and it's going to run without me. And I'm not going to be able to accept that because I've done all this preliminary analysis. I've done all this preliminary workup, listening to this guy, Jawbone. I'm all pumped up. I'm ready to go. And here it's running. It just took off 8 handles straight, one shot. It's running. Your mind's going to be tricked by that because you haven't watched price enough. That motivation to do the right things gets replaced with impulsiveness because of the lack of experience, the lack of the doing of it, being there, not just simply watching price. That's the first stage. Is tape reading is just the first stage. Then you got to do it with a demo and submit to the idea that the rules still have to be applied. But then with live fund trading or the equivalent thereof, where you can lose something, your funded account, challenge account, your funded account, or your live account, you want to capture money. And the lack of experience that you have, and everybody has that lack in the beginning. And all of you, and I was not exempt from this. I wanted to get through that stage quickly. I wanted to leave it behind me in my rearview mirror. I want to be able to say, yeah, see you later. I ain't never going back to that town again, which is ignorance, neophyteville, beginner. Like, you want to be able to leave the ranks of a newbie. When I'm encouraging you to live there for a little while, because that's going to teach you who you are. And it's going to show you the character flaws that you have, that you're pretending you don't have, that you've been hiding from yourself your entire life. However long you've been on a spinning rock, all of you have character flaws. I don't hide mine. I don't hide it. I tell you where they are. I tell you where my weaknesses are. Because when I was a younger man, I tried to pretend they didn't exist. And they were impediments to me. They held me back. They were the barriers that I hugged. I held on to them. I held on to it like something wrapped in barbed wire. It's not comfortable, but you get used to that uncomfortable state and it becomes normal for you. Like, that's why abusive relationships go on. Spouses that, beat their wives because they're weak men. That women train themselves because they have children. They don't want to break that family up. They know what that man's doing to her is not right. But they allow it to go on because it becomes normal for them. And change is a little bit more scary because it begins to bring in more uncertainty. And as humans, we don't like uncertainty. But in this industry, you chose to be in one that is always uncertain. There's nothing 100%. All the things that I have, all the things that I share, my track record, when I pull it out and I point to something before it happens, look around. You've been walking with me now for almost 2 years now publicly. How many things did I call and not happen? Very, very, very small number of that. But how many things were right and correct and where the market went to? You can't reasonably expect to be like that in the beginning. And when you learn from someone, when I was a martial artist, I wanted to be as good as the guy that was teaching me, and then better. That's what I wanted. Anything that they did that was impressive, I needed to do it better than them. Why? Because I had this deep ingrained necessity for me to be significant, because while I was growing up in Cardboard City, I was part of what we considered white trash. We lived in low income. And I got in fistfights and stomped the shit out of people that thought they were better than me. I curb stomped people. You know what that is? Where you stomp their ass, you beat them. You drag them over to a curb, you open their mouth up with their teeth on the edge of the curb, and you stomp the back of their head. I've done that before. And the sound that makes, you'll never forget it. Those are things that I've done as a kid with people older than me because they talked down to me. They acted like they were better than me. So what drives me, and still to today, is that deep scar. I was the guy on the other side of the tracks growing up. I didn't come into this world with a silver spoon in my ass. I didn't have that. Everything was a hard thing to do. And it took a lot longer than I wanted it to do. And it was very difficult. I had a lot of opposition around me. People would try to tell me, you're not going to be able to do it. You're going to just, amount to the same thing we do. And I went to school and they tried to talk me out of that. And they said, you're not going to get good grades. And I got great grades. Constantly, the enemy constantly will work on you to try to discourage you. And if you're strong enough that you have the motivation that keeps you going, when you're finally there, he's really going to try. Because you've done it. You finally climbed to that moment where now you're going to see the proof. You're going to finally get that testimony that you can hold on to and say, nobody can take this from me. And some of you are going to discover that motivation that got you there, which is, everybody needs it. I'm not trying to discourage that that's not a good thing. It is a good thing. But there's an event, there's a phenomenon that takes place where once you're there, you can't handle the pressure and you throw out all the rules. You don't wait for the setup. You think that it's going to be stripped from you. You worked so hard to get to this moment. Now here's your first shot. The first shot to use the information that you've been studying. Now you can make gainful profits if it's correctly done. But you don't have the experience yet to lean on. And you see a sudden quick movement, which really isn't that much. Nothing's changed in the trade setup. But in your mind, because you're so keyed up, that motivation, you're hopped up. You're ready to go. You're that guy that all your friends are around. Fight, fight, fight. When if they weren't there, you'd probably shake hands with the guy and say, you know what? Yeah, I apologize, man. This got out of hand. It's just forgive me for saying whatever I said or did whatever I did to you. You can't do that now because they've incited that rage. You've become lustful for blood. You need to do this now. And something happens where that motivation becomes impulse. And you don't use your model and you press the button. And as soon as that button is pressed, you're regretting it. Because now you just entered the uncertainty with no plan, no entry, no PDRA. You chased the price. And everything you've heard me say comes rushing into your brain and you're thinking, oh man, this is that thing he talked about. Now that trade seems like it's going to choke the life out of you. Maybe you start hyperventilating. You don't realize it yet. So you start feeling your fingers and your hands and your arms start tingling. All of a sudden you start feeling your heart palpitate. Feels like you can't breathe. Doesn't feel like there's any air in the room. Why is it so hard to breathe? That's anxiety. Now you're faint. You're feeling the effects of the adrenaline in your body, and you're standing still. It's like a Ferrari in neutral, running with the accelerating pedal to the floor. It's not good for the engine.